We're back, and joining us via the phone, as he does every Friday at this time, is Steve Scanlon, former financial advisor, now a consumer watchdog on the financial industry and co-founder of GuardVest. Here today to talk about a service that a lot of investors participate in. It's called Robo Investment. And for those people who are unfamiliar with it, tell us about it.
Well, good afternoon. Thanks for the time. Robo Advisers are sort of popping up everywhere, and basically what they're trying to do is essentially just give you advice over the internet for a very, very low price. So you think about Charles Schwab and those companies that have been around forever. Those typically were places that you went to go trade stocks. But now those companies and the Vanguards of the world and these companies that are deemed robo-advisors are actually giving you financial advice on your portfolio, which includes asset allocation and tax management and things like that over the internet for a very, very inexpensive price relative to full-service brokers.
Good idea, bad idea?
Well, I mean, like anything. I mean, paying attention to fees. Fees are an issue in the absence of value. So if you can find, basic portfolio management for significantly cheaper, and all you're getting is basic portfolio management from your advisor down the street, then it makes all kinds of sense. The problem still exists that they're unproven. We don't know exactly if their algorithms are any better than anybody else's, and those things always make me a little bit nervous. But I think looking around and shopping around and finding out what you're actually getting and what you're paying for, and then comparing it to these robo-advisors is pretty smart.
I guess the problem that I have with it is it's pretty much based upon one size fits all, and I question that in anything that I buy.
Well, it's really not, though. I mean, they ultimately will ask you a few questions. They'll get, most people don't have a really sophisticated financial picture. And I mean, I'm talking about people that got, a couple $1 million or less. There's not really, a lot of sophistication that goes into those portfolios. You're either a conservative investor, a growth investor, moderate, or some sort of income-oriented investor. I mean, that's where 90% or 95% of the population of investors fit in. So, you can be told that we're really customizing it at your advisor down the street, but there's not really a whole lot that's customizable for somebody that doesn't have an awful lot of money, to be honest with you.
I gotcha. Okay. That part of it certainly does make sense. And I do believe this, that getting a second opinion never hurts anybody.
Yeah, so the challenge with a second opinion, which is why we co-founded GuardVest, is you can't really trust a second opinion from somebody that's actually trying to sell you something. So, Gary, if you came to me with your portfolio and I was a financial advisor and you said, Steve, look at this advice that I'm getting from my good friend who's been my advisor for 15 years, and give me your honest opinion of that. There's a 0% chance I'm going to tell you that your buddy's doing a good job for you, because I'm not compensated to do that, right? So you've got to go, and the only place you can do it, which is why we've got a company, is GuardVest, where you actually can say, I want to confidentially evaluate my advisor without him or her knowing, and I just want to see how they're doing without a salesperson calling me, telling me that they can do a better job. And that's why we created the company, because getting a second opinion was literally impossible unless you wanted to be told that you needed to move your assets to them.
Sure, because anybody that you go to is going to tell you exactly that they can do a better job than who you're currently with.
That's exactly right. It's no different than going to a car dealership and saying, well, I've been looking at the new Toyota down the street, and the person at Volkswagen is going to say, well, let me tell you why that's a bad idea. Let me tell you why you got to buy this car and it's better. I mean, you can't trust it. That's why Carfax was invented. So you could just basically get the information that you needed without being, sold something. And that's what you need in this business, because you can turn around and spend a fortune on financial management and never really get much out of it. And by the same token, you can go in and get a really good deal, and it can end up making your retirement much better. But if you don't know, you got to find out.
I guess the reason why I'm skeptical is based upon the numbers of people that come and go over the years on CNN especially. These guys and gals that seemingly have all the answers, by God. And if you listen to me every day, boy, do I have all the secrets of life. And the only thing that I question about that is I want you to show me in black and white, not what you've done today, not what you've done in the past months. Show me what you've done in the past 10 years. Now we'll see what kind of financial advisor you really are.
And so let me challenge you a bit on that, because I think that makes all the sense in the world academically. Let me tell you why it's a problem. if somebody shows you a 10-year track record, right? And I'm talking about the listeners that you have that have a financial advisor, or somebody that's an economist at this new organization, they're touting a fund. You could come behind Peter Lynch at Fidelity and you could show Magellan's track record, but you weren't even there during it, right? So it's irrelevant to what you do. And so what I say is I wouldn't give anybody any money until they actually tell me what they would do with my money right now and let me watch it for free. You think I should go into high-yield bonds right now? Great. I'm going to watch it for a while. Build me a hypothetical portfolio, and I'll see if you're right. That's what I do. I mean, if a 10-year track record, I can't tell you how many financial advisors I've helped clients vet out that have said, well, he's got a good 10-year track record. I'm like, you know what's interesting about this? He's been in the business for 5. So how can he have a 10-year track record? Well, it's the track record of the mutual fund. That means nothing. He wasn't even in the business 10 years ago to select this mutual fund. And CNN and CNBC and all those places, I mean, they're good if you want to dig into this stuff. Most people just want a fair deal, and they want to know that they're going to get to retire. And guys like Jim Cramer and those people that are going crazy they're just entertainers. That's what they are.
Yeah, you're right. Well put. They are entertainers. How good are they? I don't know.
Well, I can answer that. Let me. It's basic lifestyle. If you had all the answers to the U.S. stock market or the global stock market, okay, and you could just go and you could just make as much money every single day that you wanted to. I mean, honestly, would you want to have a job?
No.
Would you want somebody to tell you that you had to do a radio show every day or you had to do a TV show? If you were the best advisor in the world and you knew exactly what was going to happen in the market, would you need clients? Would you need clients calling you and asking you to send you a paycheck? And all? The point, it's unpredictable. So the only thing that's predictable are the fees, and they're worth it if you find a good one. But nobody knows what's going to happen in the market. Otherwise, all the money would be with the one person who knew. So they know they have opinions. I got opinions, but ours are free.
Big difference.
Yeah, I mean, I don't think you can have it. I mean, I think if you follow these people's track records, they're unimpressive. Many of them are just very, very unimpressive. But they're really good on television, or they use big words like, right now we believe you ought to be hedging the yen. I was at a cocktail party last night, and somebody talked about a fund manager here in town that had made a bunch of money on the credit crisis, that called the credit crisis correctly, and has since had 3 huge funds, basically raised about $1.3 billion, $1.4 billion. They've all gone to zero. So, and I can't tell you how many times I've seen that, where somebody calls one big episode correctly, and then they get all these assets that chase them, and they blow up. Because the market is unpredictable. So I love financial advisors that charge you a fair fee and just do what they say they're going to do. But what I tell people all the time, Gary, is if you're going to say, rebalancing, asset allocation, tax management on some level, you can get that for 1/4%. You don't need to pay 1.5% or 2% for that. You just don't, and you shouldn't, because this environment, we're not making that much money right now.
That's absolutely true. So for those people that have not heard you before on my show, tell them what GuardVest is and why they ought to take a flyer on it.
Well, so GuardVest, basically, I can tell you, I'll make this bet to your listeners. I bet you don't have one listener, one, out of how many ever, thousands of people listen to you that can tell me exactly what they pay for financial advice, that has a financial advisor. I would challenge every one of them. You can't tell me what you pay in total. You probably can't tell me what your expected rate of return is. So what I see in most cases is that somebody's got an expected rate of return of 5, and after fees, they're paying over 3% to their financial advisor, i.e. the financial advisor makes more than them. We built GuardVest because we understand that that's a problem in the business with a large segment of financial advisors, and what we wanted was clients to have a place to go where they could confidentially and unbiased, meaning I can't manage your money. I don't care where you have your money managed, but I basically want you go to GuardVest, you link your account, which means you click on Merrill Lynch, you link your account, it takes about 60 seconds, and we give you a report card on your advisor. And when and if you're upset about the results and you want to find another advisor, we allow you to invite advisors who want your business to come to the site and build you a portfolio for free, and you watch them before you allocate one dime.
What's it cost to join GuardVest?
Costs nothing. And the reason how we make money is financial advisors that want your business will pay us all day long to try to showcase their skills in the hopes that you'll move your assets to them. But for the client, it's completely free. And I just know I've run global sales for one of the largest money managers in the world. I've been in the financial business my entire life. I know where all the bodies are buried, and they can't hide from this. This is the only place in the world where you can go get a second opinion without a salesperson calling you. And if you don't know how much you're spending, the odds of you, with your financial advisor, the odds of you being positively surprised are about zero.
Absolutely true. So how do I sign up for GuardVest?
Go to GuardVest and you create a username and a password, and then it'll ask you to link your account. So you put your financial institution in there, and then you use your username and password for that institution. And literally in about a minute, you get a report card on your advisor. So the way I always position it is I managed money when I was in the business for very, very wealthy people, people that you would know. But I never met them. I met their person, their chief investment officer, their CFO. If you got $216,000, you don't have enough money to have a CFO until now, because that's what I do for people that can't afford one on their own. That's what our service does for people that can't afford it on their own. And we're going to hold your advisor accountable. So your advisor watches your money, we watch them.
Steve, I thank you so very much for coming and sharing on Health, Wealth, and Happiness.
You bet. Have a great weekend.